Hello everyone. Welcome to the 7th Asia Pacific Climate Change Adaptation Forum. My name is Am, and I will be your technical facilitator today to ensure that you have a smooth experience with Zoom. You are at the session titled Climate Finance for Catalyzing Transformative Economic Development. We will begin in just a moment here, but before we get started, we would like to let you know that this meeting will be recorded for documentation purposes. The Q&A box has been enabled today so that you can share any questions you have for the panelists. We will refer to that Q&A box during the Q&A section, so please direct all of your questions there. The chat box is also available in case you have any additional perspectives you'd like to share, or if you need to reach out to me for further technical assistance. For those of you who are just joining us, welcome. You are at the session titled Climate Finance for Catalyzing Transformative Economic Development. I believe we are now ready to get started, so I will now hand the floor over to Preeti Bhandari, Chief of Climate Change and Disaster Risk Management at ADB. Preeti, the floor is yours.
Thank you, Am, and a very warm welcome to the participants to this session on climate finance for catalyzing transformative economic development. This is a session being organized by the Asian Development Bank in partnership with various institutions, and we are very happy that you are able to join us today, the last day of the APAN forum. And there have been very interesting discussions and conversations that have taken place during the week, and we are very happy to be hosting this particular session on the very last day. The criticality and importance of finance and investment does not need to be underscored. The scale and volume is important, but what is equally important is what are the novel areas for resilience building? Where will the finance be used? And how do we modify our financial systems to integrate climate financing? What are the innovative financing instruments currently being deployed, which could be deployed at scale? And what are the lessons that we have learned from disaster risk financing to enable financial preparedness of economic sectors to extreme events? So we have a very interesting panel to explore these various dimensions, and I will make an introduction to them later. But before that, we would like to get to know you, our participants in this particular session. And for that, we'd be launching a quick poll just now to understand who the audience is and what their background is. So Am, could you launch the first question for the poll, please? While all of you are filling up the first poll question, what I would like to say is that I was part of the finance plenary just before this event, and there were some very interesting ideas that were presented at the plenary in terms of the quality of financing for building adaptation and resilience, and also on the relevance and importance of concessional financing and different funds. And here we have the response. I see that our audience is dominated by international organizations, but we do have government representatives and also representatives from think tanks and academia and NGOs. So good to know what the flavor of the conversation is going to be, but I'd request those from the government, NGOs and think tank sectors to really chime in with their perspectives so that we get a good view of all the elements that we'd like to explore today. Could we have the second question, please? And while we are responding to the question of, where we have done much of our work on adaptation and resilience, as I was saying in the plenary, the importance of scaling up the few boutique examples that we have from the private sector did come up, and also other sectors like informal settlements in the urban sector, and also trying to change the way planning and budgeting is done in countries for ensuring investments for adaptation and resilience. So if you are interested and if you have the time, there is recordings available for all the sessions. And in terms of the background, I see that there is a fair bit of interest in agriculture, tourism, SMEs, and of course, there are some other sectors also that are represented by all of us in this conversation today. Based on this, we do understand where your interests are, but let's get started with the business of the day. And it is my great pleasure to introduce our keynote speaker, Barbara Buchner, who is the Managing Director and Executive Director of Climate Policy Initiative. She has many accomplishments, so I am not even going to make an attempt to introduce her accomplishments, because she is very well known in the climate financing field, and I'm sure many of you have met with her or attended many of the initiatives or participated in many of the initiatives of CPI. So without further ado, let me hand it over to Barbara for her keynote intervention. Over to you, Barbara.
Wonderful. Well, thank you so much, Preeti. Well, good morning, good afternoon, good evening to all of you. It's a great pleasure to be here with you today. And thank you so much to the organizers, Preeti, to you for inviting me here. And my name is Barbara Buchner. I lead an advisory and analytical organization called Climate Policy Initiative. We work with governments, with businesses and financial institutions to drive economic growth while addressing climate change. And we're known for tracking sustainable investment trends, for identifying innovative business models, and Preeti just referred to those which are very much needed, and for supporting the solutions that can drive a transition to a low-carbon, climate-resilient economy. At CPI, we have been tracking investments into climate action for 10 years now, and the latest edition of our Global Landscape of Climate Finance report, which provides the most comprehensive overview of global climate-related primary investment, found that annual tracked global finance in climate action in 2017 and 2018 crossed for the first time the $500 billion mark. And this is good news, and it reflects steady increases in financing across nearly all types of investors. However, and I'm sure we all know that here in this group, we are still falling far short of what is needed to achieve global climate and sustainable development goals. In fact, vast investments are required to keep warming within a 1.5 degrees Celsius scenario. And to reach this target, current investment trends need to significantly shift towards low emissions and towards resilient development. And scaling finance for adaptation, for resilience, is a really key part of this. So even before the COVID-19 crisis, adaptation finance was insufficient to meet estimated global needs given accelerated climate risks. What we found is that around $30 billion in adaptation finance flowed on average annually in 2017 and 2018, and which is far below the expected needs of up to $300 billion annually by 2030. And now developing countries face an increasingly steep adaptation funding challenge in the context of COVID-19 and the pressure on budgets that have really been compounded by declining tax revenue and in global trade. So countries now face a dual crisis, a dual risks due to their sovereign credit ratings. First, they face growing debt distress, and second, they face increasing climate risks, and both of them are affecting their borrowing capacity. So it is important, however, to also emphasize, and I really want to focus on that too, because I think it's we need to change the narrative a little bit of what is possible. So it's important to emphasize that the benefits of investing in adaptation often outweigh the costs. The Global Commission on Adaptation estimated that the $1.8 trillion investment in the areas of early warning systems or climate resilient infrastructure or global mangrove protection or similar areas could generate at $7.1 trillion of avoided costs and non-monetary social and environmental benefits. In fact, we're not only talking about economic costs and losses, we're also talking about severe changes to our health. We are talking about mass migration from the coasts and the hottest parts of the planet. We're talking about loss of biodiversity, and that's just to name a few of them. And the human sufferings is impossible to quantify. However, again, what I want to stress here is that there are many interventions that would help avoid this outcome and really would help stimulate resilient economic recoveries. And these interventions include a number of high impact sectoral approaches, and I'd like to mention just 4 of these. First, investing in nature-based solutions can sustain and enhance the incomes and jobs of workers in sectors like agriculture, fisheries, and forestry. Second, an increase in investment in climate adaptive health, water, and sanitation is critical for boosting resilience to future climate impacts and pandemics. Third, investing across value chains in agriculture to support food security and livelihoods will not only increase resilience to future climate impacts, but also protect against supply chain disruptions resulting from disease-related outbreaks. And finally, infrastructure. And there, at minimum, investment in infrastructure should mainstream climate-related risks. So, for example, increasing heat resilience in built infrastructure. But alongside these high-impact sectoral approaches, there are a number of major collaborative efforts are needed to complement and strengthen recovery efforts. And again, I'd like to mention just 4 before closing. First, there must be increased collaboration on debt relief. Countries participating in the G20's debt service suspension initiatives are also among the most climate vulnerable. So further efforts are needed to ensure that these countries can make investments in resilience and to expand debt relief to those vulnerable countries not currently engaged in debt service suspension programs. Second, given the predominance of emergency liquidity investments into both the public and private sectors, climate risk should be mainstreamed into liquidity support, for example, by incorporating climate risk screening and governance improvements into investments. Third, we must vastly improve climate risk data for both public and private sectors, both in terms of data availability, data accessibility, and also disclosure to unlock much greater investment in climate adaptation, especially from the private sector. And finally, development and adoption of consistent and comparable metrics is critical. Impact metrics are really critical for full accounting of adaptation finance, just because the incremental cost of adaptation is not directly reflective of the benefit of a given investment. So metrics are needed that can really consistently measure outcomes and impact. So just to close, as an economist, I know that climate action can make business sense and it's good for the people and for the planet. And I firmly believe in the opportunity, but I'm very much concerned about the speed of action. So we need to redouble efforts toward laying a path for a more sustainable, inclusive, and resilient world long term. This is a window in which we have to act all together. And just coming back, Brigitte, to what you said at the beginning, we need innovation in policies, we need innovation in business models, in financing, in partnerships. But I know that if we work together, we can make it happen. So I look very much forward to working with all of you to make change happen. And with that, thank you so much, and back to you, Brigitte.
Thank you, Barbara, and thank you for emphasizing the 4 entry points for investments, nature-based solutions, adaptive health, value chains in agriculture relating to food security and infrastructure. And I like the ordering also because in the past, there has been much attention to infrastructure, but not the other issues. So thanks for highlighting those. And also the emphasis that you have laid on collaboration and cooperation for recovery, and the 4 elements on debt relief, on mainstreaming climate risk screening, on climate data, and also related to disclosure, and finally metrics for impacts and outcomes. So thank you very much for setting the tone for the discussion that follows. Now it is my pleasure to introduce the panelists to our first panel discussion. As you would have noticed the agenda for this session, we will have a panel discussion with 4 panelists who would explore issues related to how our financial systems in country are responding to integrating adaptation and climate financing. So we will hear from them on that. We'll also get a sectoral perspective on building resilience, and also from a fund perspective on how such activities are being scaled up. So we have eminent panelists, including Paula Alvarez from the Department of Finance in the Philippines, Sophie D. Koenig from the UN Capital Development Fund, Kisa Mafalila from the International Fund for Agriculture and Development, and Mikko Olikainen from the Adaptation Fund. And they will be exploring these different dimensions from their experience and the tremendous amount of work that they're doing in their context on enhancing financing for economic sector resilience. So let me start with Paula first. Paula, we'd love to hear from you the experience in the Philippines. Philippines has really been leading with the finance department, getting very involved in climate policy and climate initiatives for the country. And that is a very, very welcome development of the finance department taking lead on such issues. So over to you, Paula.
Thank you, Priti, and good afternoon, good evening, and good morning to everyone. Of course, thank you to the APAN hosts and the ADB for allowing us to speak. So on behalf of Chairman Designate to the Climate Change Commission and Secretary of Finance, Carlos Dominguez III, I'd explain to you the context of climate finance in the Philippines. So to start with, the President appointed the Secretary of Finance as the Chairman Designate of the Climate Change Commission due to the fact that we have been experiencing, as one of the most vulnerable countries in Southeast Asia, the economic effects of climate change in all fronts. So number one, of course, we have numerous disasters, and the amount of typhoons and the intensity of typhoons coming through the Philippines are actually increasing, and this has actually affected our inflation rate in terms of agriculture production and in terms of our fisheries catch. So we have a lowering of fish catch due to the warming oceans, and our typhoon season is now 6 months. So that heavily affects our planting and harvesting season. So because of that, the Secretary of Finance found it just proper or in line with the mandate of the Department of Finance as the economic chair of the development cluster of the Philippines to actually go through on how climate finance can actually help the Philippines. So next, please. So initially, based on our experience, the green finance structure in the Philippines was made to focus on financial instruments that are designed to help the government manage the cost of disasters. So this is both in the disaster risk resiliency and adaptation as a function of mitigation part. So we have taken into account environmental risk and impacts, as well as green facilities and solutions to finance programs and projects on environment and natural resources, or ENR management, abundance in our country. So next, please. So in order to have a cohesive or a coherent policy towards the adaptation, mitigation, and other mainstreaming of sustainable finance in the Philippines, the DOF, together with the central bank, is working on how to create an interagency in sustainable finance council. So, or we call this the Green Force, or the task force that would help mainstream green finance or sustainable finance in the country. So this is a body wherein different government agencies such as the DOE, the DOST, and other members of the government could actually talk together and sit down and harmonize their policies in terms of how do you entice, or how do you help investments come into the Philippines in terms of sustainable finance? So we're trying to come up with a sustainable finance roadmap together with the UK Embassy through the Prosperity Fund. And later on, we also want to develop taxonomy and other foundations for us to usher the entry of sustainable finance in the Philippines. So aside from this, we also have the different government programs and policies already in place, like the climate change expenditure tagging system. This is a budgeting system wherein the Department of Budget and Management, together with the Climate Change Commission, goes for a call through the other agencies and ask them which of your programs or policies could be tagged as related to climate change or climate adaptation and disaster risk mitigation. So we identify these in order for us to know how much of our general appropriations or our internal appropriations are actually allocated towards disaster risk resiliency and adaptation and mitigation. So this is also part of our national budget preparation process. And it's a process wherein each government agency really has to go through, and we've been doing capacity building in order to equip them on the knowledge of how do they identify which projects and programs could actually be tagged as climate. So next slide, please. So we also want to expand this climate budgeting system to include a climate finance tracking initiative. So we have the National Integrated Climate Change Database and Information Exchange System. So this is still under, so we're developing it. So it's already online, but it's still in the development phase. So another one is the Public Investment Program online system. So this is together with the National Economic Development Authority, and it aims to provide the public of what areas they could actually invest in terms of climate. So next slide, please. So aside from that, we've already mentioned the climate expenditure tagging and the monitoring of climate change in the General Appropriations Act general special provisions. So aside from the regular PAPs or programs and projects, we also have a law which provides for the People Survival Fund, which is a fund that provides, which is a funding facility to help local governments fund adaptation projects. So although we have some issues there in terms of what is an adaptation project, because not all government not all local government units actually know how to create feasibility studies or what projects constitutes an adaptation project. So we need to help them in terms of capacity building for them to better access the fund. So I think this is a common problem for almost all government agencies. So next slide, please. So lastly, our ways forward, we've already submitted for the President's signature the Philippines' first nationally determined contribution. So this was created through a multi-stakeholder approach wherein we wanted the first NDC to be ambitious, but at the same time doable and practicable. So we had to go through several discussions, for example, in terms of energy transition, what is our energy needs until 2040 and whether or not it's doable, and what are the challenges in terms of capacity building of your sectors. For example, does your farmers already understand what climate change means? I mean, they understand that our typhoons are getting stronger, but they don't understand that, you know, it's because of climate change. So there are issues like this that we needed to tackle for us to come up with a doable and practical, but still ambitious NDC. So moving forward, we want to enhance capacity building in order for us to better mainstream sustainable finance. So last slide, please. So with that, I end my presentation, and we hope that we could be partners for change, and we'll be open to your questions after. Thank you. Back to you, Preeti.
Thank you, Paula. Thank you for giving us an exposition of all the exciting work that you are undertaking at the Department of Finance, Secretary Carlos Dominguez's personal interest in ensuring that climate is given due credence and recognition in the larger national budgeting process. And I was particularly pleased to hear about in your future directions where you're talking about convergence across sectors and also, you know, looking at different scales, the national and the local, and also using budgeting at scale and effectively to address climate related issues. So good luck to you, and we will take up your offer on partnerships and collaboration as well. I'm sure many others who are present over here in this session. Thank you. Let me now move on to our next presenter, who will take us from the national to the local level and the importance of local initiatives and local financing. Let me hand it over to Sophie from the UN Capital Development Fund to present all the very frontier kind of work that they are undertaking at the local level. Over to you, Sophie.
Thank you. Thank you very much, Preeti, for the opportunity to share some experience we have with countries. So I will speak today, introduce you to the local climate adaptive living facility, which is essentially providing a financing mechanism for subnational adaptation, working closely with central government, but also towards local authorities and the communities so that they are better equipped to fulfill their roles in terms of implementation of the Paris agreements, NDCs, NAPs, and climate-related SDGs. Next, please. So this is the heart of the local mechanism. So we were talking about financial systems. So essentially, the mechanism provides an avenue to transfer climate finance or development finance for climate change purposes using intergovernmental fiscal transfer systems. So that means that essentially the mechanism is developed so that additional grants, which we call performance-based climate resilience grants, which you see here in the blue box, additional grants are channeled through those country systems in addition to regular capital grant allocation that local governments might get. So there is a proven element of additionality and traceability of the funding from the source to central government to the local government level. What is interesting with that model is that because the mechanism is using country systems, it is therefore scalable. And so if we start with a few local governments, the countries can gradually add more local governments and achieve a larger footprint. So we'll come to that in a moment with some country example. What is also important is that central government can also federate efforts so that various sources of finance are using the same system and therefore go beyond traditional project approaches. So going back to the specifics, so local governments can access the grants as they meet minimum conditions that cater for various elements, checking their capacities, but also ensuring audit compliance from year to year. So these are checked every year. It's important to ensure the proper use of the fund, but also to guarantee the trust in the system from central government, which are co-financing themselves in some countries already, and the various source of finance. It's also important to say that they don't apply as such. So essentially, once they enter and the system is funded, there is an element of predictability of funding and lessening the burden to local governments to actually access the funding. There is an element of predictability that they can benefit from. Local governments are then invited to work against a menu of investment, which I will share an example in a moment, and towards performance measures, which are pre-agreed target indicators that will guide the use of the grants, but also incentivize change to the whole local planning and budgeting system. So typically, these will include the use of climate data or climate information, the mainstreaming into medium-term planning, but also the integration of cross-cutting issues that are of importance, be it participation, gender issues, environment, but also transparency and accountability. So every year, the local governments are assessed through an annual performance assessment, which is a third-party verified exercise involving central government, but also third-party experts. And the results will feed into this blue box again, the formula. Therefore, the local governments that perform slightly better will get a higher grant and vice versa. The results will also inform the technical and capacity building support for central and local. Because as you understand, there is an element of learning by doing in this system is changing actually country systems, and therefore it is an iterative process that is happening. Next slide, please. So Barbara was talking about, various key points, key elements that require investment. Each country has its menu of eligible investment that local governments can invest against together with their communities, which is aligned with their mandates by law, but also with the NDCs and the NAP. This is just one example from a country. Each country has its own, but typically you will find some of the sectors that were mentioned: water, sanitation and health, agriculture and related processing, ecosystem-based adaptation or nature-based solutions, agroforestry or related, as well as infra and small-scale energy from an adaptation perspective. So it might be good to also know that this experience is the collective experience of a quite large number of countries. I will show them next, and was documented and approved by the LDC group, expert group at the UNFCCC through this blue book that you see here as a way to implement the NAP. So it's an annex to the NAP technical guidelines at this point. Next, please. So the local mechanism started in Asia about 10 years ago in Bhutan and Cambodia. It is deployed through phases in each country. So countries typically first work with a limited number of local government, making sure that all what you've seen on this visual is working well, is well tuned, well designed, tailor-made to the reality of the country. So the flow of funds, the formula, the minimum conditions, the performance measures, the menu, all to be closely aligned with the country policies and systems. As it is done, they move to phase 2, which is a consolidation phase where the mechanism can be rolled out in a larger number of local governments, possibly facing different situations, different climate risk, accessibility issue, maybe different level of capacities, or at times also different security context. And then countries move to phase 3. At that point, there is no project intermediary at all. The government are accessing the fund themselves, be it government funding, budget support, international climate finance, eco-tax, concessional loans. So all these sorts of finance appear in one way or the other, and not necessarily all in the same country, but across countries that are moving towards phase 3. And Bhutan and Cambodia are already in phase 3. From 2014 onwards, a number of countries were added, both in Asia, Africa, Pacific. And over the last couple of years, we've seen this increase in demand from all the countries you see here in blue, which now understand this not as a project of a partner, but as an instrument. So they're asking for us to come and help design it, and then we'll offer it as a way to deliver climate finance for local adaptation to various partners in country or out country. Next, please. So I was referring to Bhutan. It's actually the first country that started this mechanism. The country has scaled up, almost skipping phase 2, moving to phase 1, the pilot in 3 and 6 GWs, which are the local government units, to gradually 100 GWs out of the 205 GWs of the country. That's been done with budget support, which is in a way very close to domestic resources. And it was decided by the government then to allocate part of the budget support from the EU to scale up this mechanism. So in the meantime, the Bhutan Trust Fund for Environment and Conservation was accredited to Adaptation Fund and Green Climate Fund, and they are supported to access both funds for the scale up of various projects, but in particular this mechanism to continue this long-term mainstreaming effort. Next, please. Another example from the region is Cambodia, which is actually the second country that entered the mechanism. It has scaled it up to 50 districts, financing quite a high number of adaptation measures throughout the year, and related to some of the sectors that were mentioned, or productive sectors related to agriculture, infra in particular. Notably, IFAD has been supporting the scale up through a concessional loan, and that the government somehow directed to the use of this mechanism. And so that is this model where eventually what might start as a project becomes a country system that various partners can use to go to scale and achieve longer term impact. We have also accompanied the entity in charge of decentralization in the country to their accreditation to Green Climate Fund. They're now working towards direct access, and they are seeking next accreditation to Adaptation Fund. Next, please. So this is concluding the presentation. Just to say that the countries that you saw on the map are governing the mechanism. It's not a project per se. It has evolved in a multi-country, multi-partner initiative. You see here the various entities that are either funding or part of the board as observers, because the countries are leading the way. The board is co-chaired by the LDC, the chair of the LDC to the UN on one hand and to the UNFCCC on the other hand. And of course, non-LDCs are also welcome, especially as we see a demand coming from small island developing states and African countries in particular. Thank you very much, Preeti, for the opportunity to share.
Thank you, Sophie. Thank you. And it's so heartening to hear that the initiative started with Bhutan and Cambodia, the least developed countries. So the adage here that adversity kind of engenders ingenuity. I think it's really heartening to see that these two countries led the piloting of this exercise, which is related to performance-based, and you talked about scalability, predictability, and the importance of indicators and targets and data, as Barbara also mentioned in her keynote, and the incentive, which will make this a sustainable system. So thank you for this. I have been told by the organizers that we are running a little behind. So what I would request the participants to do is please drop your questions in the Q&A box, and the panelists will try and answer them online. And what we'll do at the end of the 4 presentations of the panel is, and Barbara, I'm going to put you in the spot over here. If you could do a reflection on what you have heard from the 4 panelists, that would be great before we move on to the next section. With that, let me now invite our presentation from Kisa from IFAD on their experience in the agriculture sector and building resilience in the agriculture sector. Over to you, Kisa.
Thank you very much, Preeti. I will do a presentation with regards to the International Fund for Agricultural Development, which is an entity that is part of the United Nations agencies, but its unique value proposition is that within the UN family, it is the only organization that is considered, or it is mapped as an international financial institution. We do have a very specialized mandate in that we are focusing on one particular sector, which is agriculture and natural resources management. And we have built this very long-term relationship with governments, rural civil society organizations, because we have this unique value in terms of reaching into very remote areas where perhaps other organizations don't go, to be able to reach out to the rural communities and do much work under rural development. We have a very systematic measurement of our results and impacts across the entire organization portfolio. And we are looking or focused on producing sustainable benefits for countries. And we have increased leveraging of IFAD's capital base to ensure that multiplied returns on each dollar that we are investing on the fund. We are aligning particularly on 2 SDGs. Next slide, please. Given that we are working within a sector that is extremely vulnerable to climate shocks, which is agriculture, in the year 2012, IFAD set a very dedicated fund called the Adaptation for Smallholder Agriculture Program. And this is IFAD's flagship program for channeling climate and environmental finance directly to smallholder farmers. It is a multi-year and multi-donor financing window, providing a new source of co-financing to scale up and integrate climate change adaptation across IFAD's approximately $1 billion new investments per year. The fund is, the way it operates, it's blended with IFAD's regular investment to ensure that we increase the capacity of at least 8 million smallholder farmers to expand their livelihoods option in areas where we find that they are highly vulnerable to climate change. It is the largest multi-donor global fund, again, dedicated to enabling smallholder farmers to adapt and build their resilience to climate change. Based on the evidence we have collected so far, only a small share of global climate finance actually flows is focused on the adaptation needs of small-scale producers, And therefore, by starting this fund, which is dedicated and targeted to smallholder farmers, we are seeing that it is driving a major scaling up of successful multiple benefit approaches to smallholder agriculture, which improve production while reducing and diversifying climate-related risk. In doing so, the ASAP is blending tried and tested approaches to rural development with relevant adaptation know-how and technologies. So far, it has led to improved adaptation capacity for 5 million small-scale farmers in 41 countries. And 10 out of these countries are currently scaling up activities and lessons learned from the original ASAP investments. Next slide, please. With regards to Asia and the Pacific region, we currently have 6 ongoing projects in Bhutan, Nepal, Bangladesh, Vietnam, Cambodia, and Laos, which is not included in this slide. And I will give a few examples on what on the key findings and the lessons learned that are coming out of this investment. Firstly, we are seeing an increased number of hectares under climate resilient agriculture through an increased adoption of new practices like permaculture, agroecology, stress-tolerant seeds that are being introduced, particularly in Vietnam, Cambodia, and Bhutan. There is an increased adoption of nature-based solutions. Example, the use of vetiver in slope stabilization and in erosion control while serving as fodder for livestock. And also within government planning systems, we have increased number of groups that are involved in the process of climate risk management in terms of organizing themselves to collect data, to assess the vulnerability of their areas, and actually coming up with climate adaptation or mitigation measures that they can build their resilience. We are working quite extensively on this approach, using this approach in Bhutan and Nepal, where we are, together with the communities, we are producing what we call local adaptation planning actions. In terms of infrastructure, we are really increasing our penetration in terms of supporting climate resilient infrastructure, in terms of all-weather roads, climate-proof irrigation schemes, flood protection, and salinity intrusion protection. We are also working quite a lot at the national policy level to advance dialogue on climate change, especially in Cambodia, where we are including climate change in the extension systems, as well as the renewable energy technologies. In terms of lessons learned, the early lessons that are coming out is that climate information services in terms of data and information is critical in reducing climate vulnerability of farmers by enhancing access to climate information for decision-making. Climate resilient infrastructure is key in the Asia and the Pacific region at each step of the value chain in climate risk-prone areas like lowlands and the uplands. And also where new parameters are being generated in terms of data, which we have integrated in monitoring systems to capture salinity levels and water quality especially in Vietnam and Bangladesh. If I'm to give an example of Bangladesh, we pioneered an early warning flash flood system in a very rural, poor area called the Haor Basin, which is particularly known for producing a particular variety of rice, which is very common in South Asia. So by installing or establishing this early warning system, it is alerting the farmers way ahead of time that their flash floods will be coming, so that it gives them ample time to be able to harvest their crop before it is damaged by the flash flood. And also in this period of COVID-19, our investment have proved to be quite resilient. Again, in Bangladesh, where we supported construction of approximately 175 kilometers of climate resilient roads and embankments by integrating climate analysis and data into the design, which led to raising the infrastructure height to above the flood levels. The new infrastructure is now boosting trade between districts, has reduced post-harvest losses and improved access to not only markets, but also to health, education, and other services within the district. The resilience of this infrastructure to withstand intense flood was recently demonstrated when the country was under a lockdown because of COVID-19, coinciding with the monsoon rains and the peak harvesting time for this particular Boro rice variety. But the road infrastructure was able to withstand the monsoon floods and allowed distribution of the Boro rice from this Haor region to other parts of the country, contributing to national food security at a time of a pandemic when most of the supply chains were disrupted, proving to us that climate or adaptation financing can work together not only to build the resilience of smallholder farmers, but also strengthen the economic resilience of a country. Next slide, please.
Kisa, can I request you to wrap up soon, please?
Yes, so this is the results that we are seeing that I've already described in detail. The next slide, please. Yeah, so currently, because of the successes of ASAP 1, we are being more ambitious, and we have set up an ASAP Plus, which is an enhanced instrument to the original ASAP, to be able to build the resilience of farmers to an estimated amount of about $500 million US, which we will start implementing this year, but also focusing on building resilience to the communities that have been affected by COVID-19. Thank you very much. Over to you, Preeti.
Thank you, Kisa, and apologies for hurrying you up. I know you're doing some very, very exciting work, and agriculture sector and the vulnerability of agriculture sector is a critical issue in our region. So what you have described as the ASAP program, but also all the other work that you're doing on local adaptation plans, I think will help build that momentum for addressing the most poor and the vulnerable. As you talked about, this program is for smallholder farmers. So thank you for your presentation. And I see that we don't have any questions as yet in the chat box. So I know it's Friday, but I'd really encourage you to post your questions. And while you're doing that, let me introduce Miko, the head of the Adaptation Fund, and probably the first fund to champion direct access for countries on his presentation on how Adaptation Fund has made a difference in our communities and in our countries. Over to you, Miko.
Thank you very much, Preeti. It's a great pleasure to be on this panel, and I hope you're all staying healthy and well. So I'm Mikko Ollikainen, I'm the manager of the Adaptation Fund. And in the next few minutes that I've been allocated, I'd like to briefly present what the Adaptation Fund's approach to supporting resilience in economic sectors is. Next slide, please. The Adaptation Fund is one of the international climate funds with the longest history. Its story goes back almost 20 years, and its mandate is to finance concrete adaptation projects and programs in developing countries. Concrete adaptation projects are defined to be ones that have visible and tangible results on the ground, and this can mean many things. There are no excluded sectors. There are also no priority sectors. The funding is really based on the priorities of the developing countries that request support, and of course the quality of the proposals. Next slide, please. And as a result of this country-driven approach, the Adaptation Fund portfolio spans more than 10 sectors, and this really reflects the diversity of the particular needs of developing countries. If we look at the areas where countries decided to apply for funding, there is also no clear pattern. Sectors such as disaster risk reduction, food security, and agriculture and water management are among some of the more common ones. But one common feature across all Adaptation Fund projects across sectors is that because of that requirement of having to have visible and tangible results on the ground, they almost invariably have very strong emphasis on the local level and communities in both urban and rural settings. Our projects are very prominent in what is called nowadays locally led adaptation. So what this means in terms of the theme of this panel, which is resilience in economic sectors, is that we are typically talking about local and relatively small scale economic activities, often small and micro enterprises. And I was happy to hear also Sophie and Kisa talk about the importance of local level investment, which resonates very, very well with what we are doing as well. Next slide, please. Now, a few years ago, the Adaptation Fund Board identified that as it had been financing adaptation projects for 10 years, with primary goal to simply increase resilience, in most cases, the activities were some of the very first adaptation actions on the ground in that particular place, and often they were quite innovative, either in terms of the technical solution or how the communities were involved or otherwise. So the fund started providing specific support outside of our normal window of concrete projects, specifically for innovation. And the last 2 years, we've opened windows for adaptation innovation. Some of them are open for countries accredited direct access entities, but we also have special program implemented by UNDP and UNEP with CTCN called the Adaptation Fund Climate Innovation Accelerator, which is open for proposals at the moment. And that innovation accelerator can be accessed by civil society organizations, youth groups, private entities, and others to finance small-scale adaptation innovation projects, including in the economic sectors. Next slide, please. I wanted to share some of our project experiences here, and all on this slide are from the Asia Pacific region, and they all have some bearing to economic sectors from different perspectives. The first two projects on the left side in Solomon Islands and in Fiji, which are both implemented by UN Habitat, take place in the urban context. The one in Solomon Islands at the capital city Honiara, and the one in Fiji in a number of locations. They both address challenges that are posed by climate change to poor population, including informal settlements, and through slightly different approaches, they seek to improve human and technical capacity for disaster risk reduction. They both use a combination of physical and nature-based solutions and have a strong community-based approach. The project in Fiji will train the local population in cyclone-resilient construction methods, business skills, and microfinance access and coastal zone management. And among other things, it provides training in business and financial management skills to women. What characterizes both the Solomon Islands and the Fiji project is that they are very comprehensive, although the main challenge they address are the risks of sloping terrains and informal settlements that are exacerbated by climate change. The way they address is really holistic, and For example, the project in Fiji that seeks to help women's business development, they go, for example, as far as looking into options for providing affordable childcare, which obviously is quite important. In northern Pakistan, the project in the middle, the challenge is somewhat different. They have some very large glaciers there, and because of climate change, those glaciers are melting. The meltwaters from the high mountains cause outburst floods that are destructive downstream. And the project that actually has ended already was implemented by UNDP, increased understanding of the glacier lakes that are the source of those floods, both among technical experts and communities, and developed early warning system capacity, plus it built physical protection measures. And this project is one of those, it's completed already, and it's one of those that has been scaled up, in this case by the Green Climate Fund, which is another, as you may know, a bigger climate fund, and it built on top of the Adaptation Fund project with additional finance and expanding the geographic scope. And this is something that has happened to many Adaptation Fund projects already, which is great. And yet in another type of setting in Mongolia, the Adaptation Fund project that is implemented by UNDP responded to the problem that the local population largely depended on streams coming from the Altai Mountains for their water. And in the winter, snow accumulates on the mountains, and during the spring and summer, it thaws and water flows downhill where people can access it. Because of climate change, the snow melts more quickly than before, and after it's gone, the streams are dry. So the Adaptation Fund project focused on conserving water using nature-based solutions. It also supported local people in development of alternative livelihoods, such as greenhouse production, as you can see in the picture in the slide. It's ended already as well. It was a very successful project, and some of those activities are being continued. Next slide, please. Now, my final slide, I just wanted to mention that during the COVID-19 pandemic, one of the very important findings that comes from many of our projects is that they've applied a broad approach to resilience development, including often combinations of infrastructure, ecosystem-based approaches and livelihoods measures. And they have made the communities more resilient towards many types of shock, not just climate change. And that has been the case for COVID-19 as well. So for example, our projects that focus on water management have helped with maintaining hygiene and livelihoods projects like the one in India in this other picture with women's self-help groups. They quickly changed and adapted, the projects adapted to the COVID situation. And in India and in another project that is implemented in Sri Lanka, these types of local livelihoods groups have turned to production of face masks, and in the other project for protective equipment, which is really important during this time, and especially last year at the beginning of the pandemic. So these additional benefits really provide some additional insight to the calculations by the Global Commission on Adaptation that Barbara referred to on the economic benefits, returns on adaptation activities, and these are really echoed by the practical experiences from our project portfolio, and also to what Kisa was referring to from the IFAD experience. Next slide, please. And thank you. That's my final slide. So thank you very much for your attention.
Thank you, Mikko, and thank you for giving us examples of action, innovation, and learning and sharing, which are the three pillars for your work program. And the case studies have amply exemplified the direction that the Adaptation Fund is taking. Now, as I said earlier, I will request Barbara for her takeaways from these 4 presentations, if we can have your insights, and then we will move on to the next session. Over to you, Barbara.
Thanks so much, Preeti, and always nice to be being put on the spot here. But again, I very much enjoyed all the presentations here. So it's been actually fantastic to see all the progress that has been made in this context. So I think I've been trying to kind of just, you know, carve out a few kind of the bigger overarching points that I see. And I see basically kind of three overarching points, and then they're overlaid by a few areas which I feel are kind of key, basically critical for all of them. I think I still see that that good policies lead the way. I think there are key to resourcing sustainment and resilient recovery. I think what we've heard at the beginning from Paola, for example, really having green fiscal policies, like green budgeting, but also like reforming fossil fuel subsidies. I think that are really kind of the backbone of making sure that action can happen. But I think the second point is that it's even more clear now in the wake of COVID is that we need to use public finance even more wisely to make sure that we go from all the nice pilots that we see to scale. And I think there is, for me, two roles here. And again, we've heard from several of them, the speakers, I think both of them, first, that the real key role of some of the public banks, of the public development finance institutions, which obviously have a wealth of experience and I think can really kind of contribute to using this public money more effectively. But at the same time, I think what we've also seen is that we still need to push the boundaries and foster innovation. I said it before, you said it, Preeti, and I think we've heard it from several of the speakers, really thinking about how can we, you know, use innovation to unlock investment, particularly in the harder sectors and the harder geographies, which obviously are particularly true for adaptation and resilience. And I think we've heard a lot of very good examples, you know, from Sophie and the local in Bhutan, but we've heard from Keith in the context of smallholders, extremely important to how can we ensure that there's access to finance for smallholders. We've heard from Miko, obviously, a number of the projects and the innovation that the Adaptation Fund is fostering. And also kind of just like as an aside, also at CPI, we run an incubator, which is called The Lab, which tries to also help come up with innovative solutions that can really unlock private investment, also in areas of adaptation and resilience. But then I think the third point that I've heard again from several is, including from Sophie and from Paola, is that really what is needed is to reset the whole financial system. So I think we really need to ensure, you know, that obviously all financial institutions align their portfolios with a 1.5 degree future with a net zero future. And I think we've heard that again from several of the speakers. And I think this then relates back to one of my cross-cutting issues that I already said at the beginning, which I think data is kind of just key for all that. What you can't measure, you can't manage. So I think, and I think that came out from various of the presentations here, I think capacity building as well, really making sure, given that importance, and also that we've heard from several sides, the importance of the local context, the importance of community, really how can we make sure that we build the capacity. And I think the third cross-cutting point is around the dialogue, really how can you bring the different stakeholders together, and how can you really, you know, make sure that that you kind of, you know, we can't do that alone. I think we really got to be smarter, and we got to be also smarter, even smarter in knowledge sharing and best practice sharing, even though Miko, I think, has some very good kind of initiatives through the Adaptation Fund there. But so just to close, I think what I've heard, I think there's a lot of great initiatives. I think for me, the real question is, how do you get from the great initiatives to scale? How can you foster, accelerate replication? How can you, you know, use innovation to find new business models that really attract some of the larger private investors that are still on the sidelines, obviously, because it is a more difficult area. And in parallel, how you can you really mainstream some of these climate considerations across all the institutions we've heard from, and would love to hear from that. But again, just ending, I still see a real opportunity, and I think that was Miko's final point as well. I think supporting recovery as part of adaptation and resilience. I think we have certainly seen in practice the examples that there is additional benefits that certainly are not yet counted. And I think we just got to become much better in doing that. And back to you, Preeti.
Thank you, Barbara, and thank you for stepping in at such short notice and for the fantastic summary of the cross-cutting issues and the overarching issues per se, which came out in this panel. With this, let me move on to the second phase of this session. And this is what is called burst talks. Excuse me. And these buzz talks, it's a new term for me, but these buzz talks are supposed to introduce to you new concepts, new innovative concepts that can be scaled up. And Barbara ended with that plea also, you know, there is some such good work taking place, some good innovative ideas being experimented, but the question is, how do we scale these up? And the three buzz talks are, let me introduce the speakers to you. The first speaker is Charlotte Benson, who's leading the work on disaster risk management and disaster risk financing at ADB. The second speaker is Sejal Patel from the International Institute for Environment and Development, and she will also introduce some innovative ideas that she is working with at IIED. And the next speaker is Roberto Leva with the private sector operations at ADB, and he will also bring to the fore how he's working with the trade finance program at ADB to build in climate and environmental safeguards. So since it's a burst talk, I will not say anything first and allow Charlie to make the first burst intervention. Over to you, Charlie.
Thank you, Preeti. And great, my slide is up. So good morning, good afternoon, good evening, everyone. I'm going to talk very briefly about the development of contingent disaster liquidity facilities as a mechanism for enhancing microfinance institutional MFI resilience to disasters. Next slide, please. So MFIs are highly vulnerable to natural hazards in many countries, reflecting the vulnerability in turn of their client base. They serve low-income clients, often women, who are typically self-employed in more vulnerable occupations, for instance, in subsistence agriculture, in petty trade, in home-based income-generating activities that are often located in relatively hazard-prone areas. So when disasters occur, MFI clients often struggle to repay their loans on time because their income streams are greatly reduced, requiring repayment holidays and rescheduling. And of course, they also urgently need new loans to support the recovery of their livelihoods. Although perhaps counterintuitive in terms of the implied increased indebtedness of MFI clients, there's mounting evidence that when MFIs are able to provide additional loans after a disaster on top of the pre-existing ones, client recovery is accelerated and repayment performance for both the pre-existing and the new loans is strong. So for instance, ADB supported some research along these lines by Vision Fund International and its partners in the Philippines after Typhoon Haiyan, or Typhoon Yolanda as it's locally known, in 2013, which demonstrated precisely this. At the same time, of course, many MFIs are not in a position to extend new loans after a disaster, precisely because of the need to reschedule the existing ones, so limiting their ability to provide new loans. Next slide, please. So ADB has therefore been working on the development of a common contingent disaster liquidity facility for MFIs, which would channel funds to them to cover liquidity gaps and better manage their cash flows in the event of disasters, allowing MFIs in turn to issue new loans and indeed to help ensure that they themselves don't go under. The facility would catalyze and coordinate access to pre-arranged liquidity arrangements by accredited MFIs, potentially drawing on finance from both the public and the private sector. The facility could also potentially serve as a vehicle to channel support from development partners, allowing those aid resources to be rapidly transferred to those in need and immediately put to work. The MFIs would be required to meet certain standards around their disaster risk management, including contingency and recovery planning arrangements in order to join the facility. So in effect, incentivizing some better practice and also helping to facilitate the prudent management of the facility itself. Next slide, please. So as part of the design, we're also working on a number of complementary measures which would contribute to the successful implementation of such a facility and to help reduce the underlying vulnerability of both MFIs and their clients. These include the development of a stress test tool, which would allow MFIs to assess their portfolio exposure to disaster risk as a first step towards building financial resilience. So in effect, allowing them to actually know the risk that they face. The measures also include capacity development for MFIs in managing disaster risk and recovery planning, and also capacity development for MFI clients on accessing and using disaster risk information for improved decision-making, in turn helping to de-risk the MFI loan portfolios themselves. Next slide, please. So that's it. Thanks very much for your attention, and do reach out to us if you'd like to discuss this further through the email address indicated below. Thanks very much. Back to you, Preeti.
Thank you, Charlie, and thanks for leading this work. It's a very innovative initiative that you have embarked on, and I'm sure there will be further engagement with colleagues on this call. So let me hand over to our next speaker for another innovative idea that they are championing. Sejal, over to you to talk about IIED's work on debt management.
Thanks, Preeti. And hello to everyone on the call. So I'm going to be talking about an approach that represents a potential innovative source of climate and nature finance, and that's debt management for climate and nature outcomes. So if you could go to the next slide, please. So this approach is a way to take a coherent response to the three global crises of climate, biodiversity, and debt. And the pandemic has already, as the speakers before have said, exacerbated the current situation in developing countries, and particularly in regard to debt. And the debt situation even before COVID was raising flags. So the mounting fiscal pressures are now currently driving up sovereign debt. The economic impact is affecting progress on SDGs and also taking economic focus away from climate and nature financing. These are all interdependent issues requiring globally coordinated action that is also looking to be sustainable for the long run. And that's why debt management that integrates climate and nature will be key in the recovery. And it's also why acting now is critical. While the debt burdens, the liquidity issues, and the fiscal space constraints can be managed to support economic resilience. Without this kind of coordinated support, countries' debt positions will continue to worsen, and they risk going into distress and default, which has significant impacts both nationally and globally. So how does debt management for climate and nature work? So it's where a creditor and a debtor are agreeing to restructure the debt in some way, whether that's a change in the terms, whether it's buying debt back at a cheaper rate on the secondary market, or it's supporting conversion to a different financial vehicle. And then the transaction costs that are saved on what the debtor would have had to pay back on servicing the loan are then invested under climate adaptation, mitigation, or nature and biodiversity activities. So in effect, what you're seeing is the money that was going from the government budget to service a loan to the creditor is now going from that government budget to pay for climate and nature activities in the country. And then the other key point is that the transaction should also involve some proportion of debt write-off, because these countries will already be having some sort of fiscal space issues. Just redirecting the loan payment all to climate and nature activities wouldn't be enough to help countries reduce that risk of distress. So there also needs to be some room made in the budget. Next slide, please. So how to get large-scale debt management for climate and nature? So far, debt management approaches have taken a very piecemeal approach. Modalities like debt swaps, which were undertaken in the last 20, 30 years, have focused on smaller projects with money managed in trust funds by international NGOs. What we're proposing is that debt management is undertaken with a systematic approach by integrating into the international infrastructure and shifting proceeds from projects to programs through the use of budget support, where funds are paid into a debtor country's government's own budget. So budget support allows for a larger amount of funds to be mobilized, increases debt government ownership, and shifts accountability to national citizens. The funds can be managed then as performance-based payments based on agreed policy commitments like the NDCs, the national biodiversity strategies, or other relevant national plans and strategies. So that gives the country more ownership over where the funding is going. And then there's several economic benefits of scaling up debt management, including expanded fiscal space, increased investment behind climate and nature activities, increased growth, improved sustainability of the economy, and a reduction in poverty through pro-poor investments. Next slide, please. So I'm just going to very briefly touch on some of the actors in the landscape and why they're incentivized for this to support this approach. So from the debtor country side, looking at ministries of finance and central banks, they can see it as a way to improve economic growth through these investments in climate and nature. It supports debt sustainability and a greater ownership. And debtor countries that are approaching creditors to discuss debt management, where they're making a climate and nature link, they're more likely to get a sympathetic hearing, and so more likely to strike an agreement to restructure. It's also a way on the creditor side to contribute to international climate and nature commitments, and it funds activities already in debtor countries' national plans. So it's supporting greater country ownership. And several country leaders, such as the representatives in Cabo Verde, Uganda, Jamaica, and other countries, have been expressing interest in high-level forums. It could also form a key part of climate finance flows that's of interest to the UN process. And the UK, as host of COP26 this year, are looking, one of their key focuses is on looking at innovative sources of climate finance. China, who's the biggest bilateral holder of debt, is also the host of the UN Biodiversity Convention this year. So they're more likely to engage in an initiative like this. And then you're also looking at private creditors who are holding an increasing amount of debt. And for them, it's looking at increased debt sustainability. So they're taking a reduction in their revenue, but what it means is that the debt isn't being defaulted on. So they're still making some return. So there is some incentive there for private creditors. And if you look at another key player, the US, the President Biden's climate plan is also referencing providing green debt relief for developing countries that are using it against climate commitments. And just finally to note that the IMF, World Bank, OECD, and UN are developing a platform, and they'll be presenting the concept for this platform that will be a facility to support this kind of climate and nature linkage to financial instruments at the spring meetings, and they're looking to launch something later this year. So it's moving towards an updated HIPC. So what we've termed here, highly indebted countries climate and nature debt management initiative. Thank you, and back to you, Priti.
Thank you, Sejal. And your presentation is directly responding to one of the points Barbara had raised in her keynote on debt servicing and debt relief. So we look forward to further details when you unveil this at the spring meetings of the World Bank. But thank you for introducing it at the event today. And now let me move on to Roberto, who's been waiting patiently. It's not an easy task to be the last speaker in an event. Roberto, over to you to the work that you are doing in trade finance.
Thank you very much, Priti. Hello, everyone. Very nice to be here. So just as a little word of introduction. So I work for the Trade and Supply Chain Finance Program at the Asian Development Bank. And the scope of our program is to help the Asian economies grow towards import of goods that they need to sustain the current growth and to ensure that we empower the countries to meet the sustainable development goals. Now, how we do that? We do that via guarantees that support these import-export activities. We do it by a loan with the same purpose. And we create what we call knowledge products, which are different initiatives that are meant to help the countries and the banks and the corporates and the small medium enterprises in the developing member countries of ADB to grow towards through trade. Now, the challenge that we face in our program is the complexity of supply chains. Now, supply chains have become global. They go down to the smallest SMEs and are per se complex when it comes to the risk that needs to be managed. That could be climate risk, could be social risk, could be a credit risk. So it's a very complex environment. It's like a spider net of relationship, and specifically in Asia, the spider net is particularly cumbersome because a lot of the corporates they are actually playing a role are small medium enterprises. So we've got 96% of all Asian businesses are classified as small medium enterprises. Now we do see these challenges as being an opportunity as well, because when we step in, we have the into a specific supply chain, we have the possibility to have a connection with all levels of the supply chain, and we can help all the stakeholders understand, analyze, and mitigate the risks that I just mentioned. Now, to give you an idea of the size of the program, we work with over 240 banks in 21 countries. So the banks could be either local banks in developing member country, which we help growing the local economy. It could be international banks that need support into engaging these local banks and therefore growing their relationship worldwide. Can I ask to go to the next slide, please? Now, I try to explain a little bit about the what we do, but it's very important to see how we do it, okay? So first of all, we are developing safeguard measures. So the safeguard measure could be specific on a good, on a sector, or on a specific risk. Like, for example, palm oil, very challenging product when it comes to environment and the impact that it can have. Or, for example, child and forced labor, or obviously the impact on climate, so carbon emissions. All of these level of KPIs are very important to be measured. What we're doing is like, we are building this safeguard for our own program because you need to walk the talk. And then we are exporting these safeguards to our banks. So we tell them how our experience has been and how these safeguards can be implemented their hand to ensure that this level of risk is managed. Now, we also work with partner banks to enhance what's called an environment and social management system. What are those? The environment and social management system is sort of like the standards that are applied across the board in an institution, in a financial institution, to ensure that social and environmental risks are managed properly. Now, when we look at, for example, a bank in emerging markets, there are already some sort of level of structure when it comes to mitigated climate risk, for example, in the transaction. So, but it's very hard for the local banks as a specific regional focus to bring themselves up to global standards without help and support. So what we're doing is like we engage by also local consultancies with the banks, sit down with them, look at all the current processes, look at all the current risk management procedures, and identify potential gaps and opportunities for such risks to be mitigated. We are currently doing it with 6 banks, at the moment. It's sort of a pilot kickoff, but we'll be growing it in more and more countries and banks in the years to come. Now, another point that we're doing is to deepen the awareness of ENS safeguards. So we build what we call knowledge products. So obviously, like, having the best possible procedures, it's a great achievement. And coming up with very high quality standards it's very important, but it's all of this become quite useless if the ultimate user, it doesn't know what to do with it, doesn't receive the proper training. So we do webinars, we briefing, podcasts, basically we don't stop talking. And to kind of ensure that the message and every standard that we develop gets delivered down to the smallest SME. Now, one example that I wanted to bring before we close the session would be on the next slide, if I may ask to move. Okay, perfect. So when it comes to bringing up new ideas and like try to bring theory into practice, we are currently working on a pilot with a fintech that's a UK-based fintech called Hello Trade. Hello Trade is very active in the trade space, in the sustainability space, and we created the project, which we are now just named Project Asha, which means hope in Hindi. The project will take place in India, and it will be a project, in this case, based on social elements rather than climate, but it can be transposed, the similar logic, to a climate project. What we're trying to do is like we are working with factories that produce garments in India. These factories produce garments, sell them to international buyers, and the international buyers then have to pay the factories, obviously. What we are doing here is to implement, thanks to Hello, a voice tool in the factory. So an opportunity for the workers in the factory to log complaints and log their status of how they are treated, so from a social perspective. And what happens is that if a specific factory implements the voice tool and meets a certain criteria, they get access to cheaper financing, meaning that an international bank will be discounting, so paying them in advance the money that they are due to receive from the international buyer, but taking the credit risk of the international buyer rather than the one of the factory. In practical terms, if you were to be a factory in India and you were looking for a working capital loan, let's say you would end up paying 7%. If you are of interest, if you do the same loan, but based on the risk of the international buyer, you can end up paying 10 times less. So what we're trying to do is trying to incentivize the implementation of social controls in this end for the factory to receive a financial advantage by the discounting. Now, this can be transposed easily to climate initiatives, because like the fact that in this specific project, we picked the social aspect of the labor force and the voice tool, it's just for the pilot. But if you think about it, you can apply this for like environmental controls that the factory can be doing. And you just need to sit down with the international buyer, understand what their perspective is, what their valuables are, and build this sort of logic, which is, by the way, also technologically quite advanced, is based on blockchain, which was the hype word of 2 years ago. And it's just kind of will translate into behavioral, a better behavior from the factory towards, in this case, the worker or the climate controls. One element of the pilot would be actually to monitor how much this financing carrot will be able to influence positively the ESG KPIs in the supply chain. So this would be it for me. As I said, I was last. I don't want to be too long, but if you like to know more about what we are doing, please just Google ADB Trade and Supply Chain Finance Program, and you will find my picture, my colleague's picture, and all our contact details. And we'll be more than happy to talk more about all of what we are doing. Thank you very much.
Thank you, Roberto, and thank you for helping us end on a note of hope. Asha, as you called the name for this in India. I do understand that we've come to the end of our allocated time, but I would beg for your indulgence for a few more moments, because what I would request the panelists from the first session, Paula, Sophie, Kisa, and Miko, to do is, they've heard these 3 burst talks, and in the spirit of collaboration and a community of practice that we are developing on some of these innovative ideas, I would request you, in a 30-second takeaway, talk about, which of these ideas excite you and whether you would like to explore them further. Paula, can I start with you?
Yes. Thank you, Priti. It's very amazing how there's so many innovation and technology already available for different solutions. This is a very welcome development, and I think yesterday we were also talking about it in the ADB forum, that how we leverage technology towards disaster risk resilience, and I think it could also be used in adaptation and in utilizing other financial instruments. But I think a word of caution here is that not all developing countries have the infrastructure, especially in terms of internet and digitalization, that could roll these out efficiently. So I think these are considerations that we also have to look into in trying to develop technologies and innovation, because there's still a gap in terms of, for example, even if we want to use financing solutions and technological solutions to reach, for example, those in the most far off regions in the Philippines, like off-grid islands and islands in the farthest of the Visayas and Mindanao, even if we want that, it's still a reality for us that they don't have internet connection, and some of them don't even have the infrastructure of having a device or a laptop or these kinds of things. So I think when we try to develop innovation and technology, I think these are things that we should still put into consideration, so that countries like the Philippines can actually catch up, or the technological innovations could bring more change, or it could really affect the lives of the people most vulnerable to the effects of disasters and climate change. So
thank you. Thank you for your word of advice that we do get excited about various innovative ideas, but there are certain ground realities that need to be taken into account. And I'm sure the three burst speakers are taking note of this. Over to you, Sophie.
Thank you, Preeti. Well, it was, all three examples were very interesting. I'd like to maybe pick the example shared, or the work from Sejal. As you remembered, I mentioned some of the most advanced local countries are working with budget supports or concessional loans. That is the case for Bhutan, Cambodia, but we see many other countries as they progress with the local mechanism to have that potential, and some sooner than later, because they also have very strong PFM system to channel finance down to the local level. So I think, to me, that's as this agenda progresses politically and with support, I think that those countries offer a really practical way to operationalize that concept. So I'd be happy to follow through the discussion and work closely with Sejal to see whether we could make it happen in concrete terms in some countries. Thank you.
That's a fantastic outcome from this session. Over to you, Kisa.
Thank you very much, Preeti, and thank you very much to all the BASC presenters. Actually, all the new instruments that they're piloting are quite interesting and relevant to majority of the IFIs. But I wanted to zoom into presentation by Roberto, where he presented about the Safeguard Initiative. What I like about this particular initiative is that it does not only look at the upstream aspects of what are the risks, environment and social risks and impacts of initiatives, but it looks across the value chains. And he has moved away from the public sector focus onto the private sector, especially the banks. What I see as an opportunity for collaboration is that ESG is becoming quite relevant now, both in the public and private sector, and each IFI is piloting it separately. What if we come together and agree on a common approach? And even the way we are rolling it out to private sector like the bank, why don't we do it together jointly between IFIs and bringing in also other entities like IFC? Because the benefit of it, one is that we're strengthening the balance sheet to be able to bring in new initiatives that are focusing more on environment, climate, and social aspects by managing risks throughout the supply chain. Over to you, Preeti.
Thank you, Kisa. Miko, the last word to you.
Thank you, Preeti. I'll be very quick. No, it's very, very encouraging to see these new financial models that the bursars have presented. This is exactly what we need, thinking laterally and thinking outside of the usual box, and taking models from other areas and applying them in adaptation and resilience. I think that's really what we need to be doing even more. So my sense is that there is a lot of untapped potential, and I would be very keen to work together with all the speakers. Thank you.
Thank you. Thank you, Miko. And let me thank all the panelists and our keynote speaker, Barbara, as well as Sejal, Charlotte, and Roberto for making this a very, very interesting discussion. And there is a lot of follow-up, I think we can see amongst our institutions. Of course, we are working together, but with the Philippines government, with the various institutions represented on the panel, we have already developed a relationship. But if we are to talk about the scale, to take these boutique solutions or important learnings together, there is definitely scope for learning and sharing with each other. So thank you all for your participation, and thank you for the audience as well for joining us, and we will remain in touch. And I just want to say that if you want any further information from the Asian Development Bank, my colleague Orgosina Roy, who has curated all these sessions, is the right person to approach. And we look forward to working with you. So thank you very much and have a good rest of the day or the evening. Bye-bye.
Thank you so much, everyone. Thank you, Preeti, for a wonderful session, and to all the panelists for their fantastic insights. Thank you again for attending today's session as part of the 7th Asia Pacific Climate Change Adaptation Forum. Please join us for the closing session of the forum, Scaling Up Action, which will begin at 2 p.m. Bangkok time. Don't forget that you can access the Hupilo community, where you can also explore exhibitions and chat or set up meetings with other conference attendees, and join the conversation on social media using the hashtag APAN 2020. Thank you once again, everyone, and see you in the next session.